Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Monday, the 3rd of March, Bull versus Bear webinar. Steve Miley here on the call for trade day. Welcome, everyone. We're going to go through our slightly different run through here that we do on a Monday. We're going to take a look at what I like to call the shape of the week, looking at the bigger picture events that are shaping markets over the past week and what's going to continue to shape markets and the potential volatility points going into this week. Why do we do this when we're day trading at trade day? Is because you might want to know where the volatility points. If the volatility points are likely to come maybe later in the week, then you might be expecting maybe less volatility at the beginning of the week. You might slightly adjust your trading strategy because of that. And it's good to know what's coming up in the week. It's good practice to have an understanding of where the potential points of maybe turning points or potential acceleration points might be coming due to the macroeconomic geopolitical developments that we're seeing in markets. So looking back before we look forward, last week, obviously, stocks were significantly lower. Bond yields fell. So that's bond prices going up, bonds going up, and stocks going lower on geopolitical concerns, and also the slowdown in consumer data. So geopolitical tensions rising over both tariffs and Ukraine-Russia last week. And then we had some consumer data over the last 2 weeks that is seeing a slowing, and that is worrying markets in here of the potential slowdown in the US economy, slowdown in the global economy. Inflation is persistently sticky. So the US PCE data on Friday was in line with expectations, but not moving down close to that 2% level. Remember, this is the Fed's preferred inflation measure, so not moving down. So that's a little bit of a concern. And obviously, those geopolitical tensions around both tariffs and Ukraine, Russia, particularly after the events in the Oval Office on Friday, kind of kept markets a little bit jittery in here, a bit on edge. However, that's kind of calmed down over the weekend. Markets did rebound on Friday after that PCE data, and even after the events in the Oval Office. Markets did then have rebounded further. European stocks pushing higher this morning, mostly led by defense stocks, with Europe coming together and potentially going to make a coalition of forces to police or peacekeep in Ukraine. So defense stocks are doing well in Europe and have been doing well in Europe recently, taking European stocks actually to new all-time highs this morning, and US futures rebounding as well this morning. So the spotlight going into this week stays on the geopolitics. I've said this multiple times already this year, but if you weren't around during the previous Trump administration, you would have had a baptism of fire maybe over the last however many weeks it's been since the inauguration. Now 4, 5, 6 weeks of the extra volatility that a Trump administration brings, and we've certainly been seeing that in markets over the last few weeks in here. And so both on the tariffs and trade side and now on the geopolitical side with the Ukraine-Russia situation, then that is probably going to continue, at least in the short run, probably in the intermediate term. So volatility can spring from any point. So we are keeping an eye on that. We also get PMI data. We've had PMI data today, manufacturing PMI data. We'll talk about that shortly. We have on Wednesday, we also get further data. I'm going to run through the calendar in a minute, actually. We get the ECB meeting coming up on Thursday and the all-important, as ever, US jobs report. If we jump down to the calendar, you'll see, so we'll get global manufacturing PMI today, also the EU CPI. We'll take a look at that shortly. RBA meeting minutes, Japanese and EU unemployment rates tomorrow, probably not too much of a focus for the US equity indices. Global composite and service PMI data does come through on Wednesday, though. And then US factory orders Wednesday. We get the ECB meeting, nothing really of note out of the US on Thursday. And then on Friday, the key is going to be the US jobs report coming up. So if we take a look at the data, and remember, you get these reports. These are in the members area, both the macro matters and this macro summary reports. This is just a shortened version of that macro matters. If you don't want to read through all of it, there's the more in-depth report, the macro matters, macro summary. They're in the middle column of the three columns of. We have the left-hand column being the daily market chartist technical analysis reports on US indices, oil, gold, and US bond markets. You can get those. On the left-hand column, middle column is the weekly, comes out of the weekend, the macro matters and the macro summary reports that you see here. They're in that middle column, and the right-hand column is the news from our news aggregation from our partners at LiveSquawk, who also provide the Squawk service that we have. So yeah, take a look at all of those. Looking at the calendar though, you'll see PMI data out of Europe this morning. Green, 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 all the way through pretty much in here from Switzerland, France, Germany, Eurozone as a whole, and the UK, all in green. CPI data out of the Eurozone slightly higher than expected as well, though, so that's a slight negative. Preliminary CPI for February for the Eurozone slightly higher than expectations. So that's definitely a slight negative, but the PMI data certainly a positive. And looking ahead to this afternoon, we get the equivalent from S&P Global at 9:45 Eastern time today. But more importantly, is the US ISM data that comes out at 10 o'clock. So 9:45, the S&P Global manufacturing PMI data, and then 10 o'clock, the more important ISM manufacturing data. So certainly need to be watching out for those today, 9:45 and 10 o'clock Eastern time. One other thing to note as well is Fed Watch in here. We have the Fed meeting is on the 18th and 19th, with the result coming out on the 19th of March, the decision on the 19th of March. This is the blackout calendar. So the Fed goes on blackout a week and a half before, on the Saturday, a week and a half before the meeting. So you can see that's going to be this coming Saturday on the 8th. So this week is the last week of Fed speakers. So watching out for Fed speakers this week. This is the last time we're going to hear from any Fed speakers on monetary policy until after or till during the press conference. That's after the announcement on Wednesday the 19th. So just to keep that in mind. Just going to see if this is updated in here. The Morning America, oh yes, is updated in here. So on the Morning Briefing America from Bloomberg, Zelensky is willing to meet Trump again for serious talks. So olive branch there. Maybe Zelensky going to return to the US potentially, having had talks in Europe this weekend, in the UK. Trump is barring towards his Tuesday deadline for slapping levies on Canada, Mexico, and China. So that's all going to be interesting to see if that happens on Tuesday. We're going to be watching out for that. Trump going big on crypto again. Crypto market up this morning. President talked up his plan for a strategic crypto reserve, and that's the crypto market moving higher today. So on this in here, the main focus for us is going to be the tariffs coming up, the Tuesday deadline. For levies on Canada, Mexico, and China, and then any further developments in here, either out of Europe or out of the US on the whole Ukraine-Russia potential ceasefire. Looking at what we've seen today, as I said already, defence shares lifted European stocks to near record highs again here on the broader stock indices. So defence stock pushing higher, and another one there, defence shares lift European stocks to near record highs. Is that the same article? Yeah, same article. And then European shares up as defense stocks boom. Bitcoin surges on Trump plans. So I've already covered really all of that. US stock futures gain amid wages that the sell-off is done. We've obviously had a big sell-off in here over the last week and a half. Market rebounded on Friday and further slight rebounds in here this morning. So potential turning point coming up. But maybe you're going to hold off until we see that ISM data today. Maybe until we see anything from Trump regarding those tariffs that the deadline is for tomorrow. Futures head up with economic data, tariffs in focus. Running around the global markets in here this morning, Hang Seng, little change up about 0.3, but the Nikkei saw a solid rebound, catching up with the rebound that we saw on Friday from the US, up 1.7% this morning. European stocks, as we said, doing well this morning. The UK FTSE up 0.7, a big leap in the German DAX index at 1.4%, and the French CAC up just over 1% this morning. And US futures markets up also this morning. The S&P 500 just under up 0.5% and 0.2% up on the Nasdaq already. Turning our attention to the fixed income markets, the interest rate curve. Here's the Fed Watch tool. As we said, no real chance for a rate cut in here at the March meeting, but now growing risk. We're going to, 56%. Sorry, only 25% now chance that we won't have cut by June. Okay, and if we look at May now, increasing risk. Not much of a risk that we were expecting in May, but 72% that we're still unchanged in May. So the money is really going on a June rate cut now. Only 25% that we won't have rate cut by June. And by July in here, now only 16% we won't have a rate cut. And potentially now building in here, 50% chance that we've got up to 50%. And then by the end of the year now, increasing chances we get 2, maybe even 3 rate cuts priced in. And that's also reflected in the long end of the curve. Here's the US 10-year yield, been plunging low. This is the concerns over the economy and also geopolitical concerns. Remember, lower yields equals higher prices. Market's been buying bonds in here, bonds going down in yield, higher in prices as a safe haven, bet because of the geopolitical tensions around tariffs, because of the geopolitical tensions around the Ukraine-Russia situation. So bonds are going up in price, down in yields, and we see these big rallies we've had in the bonds right the way across the yield curve. 30-year up, 10-year continuing, 5-year also up, 2-year. And remember the shorter end of the curve, particularly the 2-year, also echoing that shift towards potentially another rate cut. Remember, we were pretty much pricing in one rate cut this year, maybe in the summer. Now we're pricing in by the end of the year, certainly the first rate cut at the beginning of the year, potentially a second rate cut by the end of the year, maybe even a third one by year end. So that short end is reflecting increased a bid in here on anticipation of more rate cuts, and the long end here, the 30-year and the 10-year, going higher as safe haven bid because of also because of the potential lower yields, lower interest rates, but also because of a bid to bonds because of geopolitical risks and tensions. Equities in here, despite the rebound we had on Friday in here, and despite the rebound this morning, we're staying negative in here. But if we get a little bit higher in here, we'll probably turn more bullish in here. I do think there is risk that we go higher today. Watching out for both those PMI data we have coming up. So in here, I think if we can clear above in here, this is on the ES. If we can clear above the resistance we have here, 60.15 to 60.24 area. If we can get above these peaks in here, then this starts to form a basing pattern, and I think we can go notably higher. Similarly on the Nasdaq, it's much further on the Nasdaq. We're looking for a move towards 21,390 up to 21,450. Only through there signals a much more bullish tone. We do have a small level in here, 21,165. Above there would also see a more bullish tone. So the underlying theme's still bearish, but I wouldn't be surprised. I'll be watching those data points today if we don't see a significant rebound continuing from Friday through already this morning and going into the main session today. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another Bull versus Bear webinar on Tuesday. Bye.